Welcome to the monthly economic update. I'm joined again by Bob Cunneen. Welcome, Bob.
Thanks, Jason.
We saw a return to volatility in the month of February, but I'm just interested to know how the month finished off after the lows we saw.
Well, it was quite a turbulent month in February. So the opening weeks saw sharp falls in Wall Street. At one stage, Wall Street was down nearly 10% for the month, but it actually made a reasonably strong comeback. So the net impact in terms of global share returns was a negative 3.6%, but that also reflects a weaker Australian dollar. So from an Australian perspective, a lower currency has sort of like mitigated the negative impact.
And we also saw a run up in the US 10-year bond yield, but where did that finish towards the end of February?
Right, so the American 10-year bond yield rose quite strongly, so nearly approaching 3%. Essentially what we're seeing in the bond market is this concern about American inflation pressures. So wages rose at their fastest pace since 2009. Given such a strong jobs market in the United States, there's concerns that with rising wages, there's rising inflation pressures, hence higher bond yields.
And what are the widening of spreads in the US credit markets telling us?
That is telling us that it's really a risk-off position at the moment, that both investors in the US share market but also investors in the corporate bond market are concerned about future interest rates, future inflation pressures. And because of that, they like to lower their positions and hence the prices have fallen.
Okay, back to Australia. How has the Australian market fared over the month of February?
The Australian market was remarkably resilient. So we etched out a very tiny gain in the broader share market, but all things considered, we've been quite resilient because we were not as overextended as Wall Street was running into January, and hence the pullback that we've seen was quite minimal.
And the Aussie dollar?
The Aussie dollar was substantially weaker, and so that's helped boost the global share portfolio return. But what we've seen is the Australian dollar correct quite significantly, come down from an 80-cent level down to below 78 against the American dollar.
So with all that in mind, what do you think investors should be focusing on over the coming months?
Well, essentially the key issue at the moment is the American inflation and interest rate profile. The concern is that if inflation pressures are building, a tight labour market in the United States, President Trump's tax cuts, high budget deficits, these are all adding to the risk that US interest rates move sharply higher. And with that, Wall Street is potentially vulnerable to a further correction.
Great. Well, thanks for your time again today, Bob.
Thank you very much, Jason.
And thanks for joining us.